Welcome back to Market Minute USA. While most people are enjoying their Sunday, the biggest hedge funds in the world are preparing for what could be the most volatile Monday morning of 2026. If you think the rally we saw last week is going to continue into tomorrow's open, you are not looking at the global data. Over the last 48 hours, something massive has shifted in the overnight futures. We are seeing a historic liquidity gap that suggests the whales aren't just selling, they are bracing for a systemic shock. The 49,000 Dow level we celebrated on Friday is now acting as a ceiling that no one can break through. Why? Because the institutional money is moving into safe havens like 10-year treasuries and gold at a rate we haven't seen since the 2008 crisis. If you have open positions in high-growth tech, specifically Nvidia or the Apple ecosystem, you need to listen very carefully to what I'm about to say. Tomorrow morning, when the opening bell rings, we are expecting a massive gap down in the Nasdaq. The reason is simple: the inflation trap we've been talking about is no longer a theory. The latest weekend reports on consumer spending are showing a sharp decline, meaning the high interest rates are finally breaking the American consumer. When consumers stop spending, tech earnings evaporate. We are looking at a potential 3% drop in the S&P 500 within the first hour of trading. The whales know this. They've been using the retail FOMO of the last few days to exit their long positions, leaving everyday investors to hold the bag. Look at the volume profile. Every time the market tried to push higher last week, it was met with massive sell blocks. That is not retail selling, that is institutional distribution. Now, let's talk about the Monday morning panic. History shows that when the market closes near a psychological high like 49,000 and fails to hold it, the following Monday is usually a bloodbath. We have geopolitical tensions rising in the Middle East that could spike oil prices to over $65 a barrel by the time the New York Stock Exchange opens. If energy costs jump, the Fed's hands are tied, they cannot cut rates, and they might even have to signal a hike. This is the nightmare scenario for the stock market. You need to be looking at your margin levels right now. If you are over-leveraged, a 2% drop at the open could trigger a margin call that wipes you out before you even finish your morning coffee. So, what is the game plan for tomorrow? First, do not chase the open. If the market gaps down, the dip buyers will try to push it back up in the first 15 minutes. That is usually a dead cat bounce. Don't fall for it. Wait for the 10:30 a.m. reversal. If the market doesn't find support by then, we are headed for a multi-day sell-off. Keep your eye on the VIX, the fear index. If it spikes above 25, the panic is real. My advice? Raise some cash tonight. It's better to miss out on a small rally than to lose 20% of your portfolio in a single session. This is Market Minute USA, and we are here to make sure you are the predator, not the prey. Hit that subscribe button and turn on alerts, because I will be dropping a live update the moment the pre-market data hits tomorrow morning. Are you ready for the Monday mayhem? Tell me your exit price in the comments. Stay safe, stay sharp, and I'll see you at the opening bell.